rollover is going to be happening in just a few days. Typically, for the major indexes, TradeStation tells us that rollover is 7 days prior to the last trade date. And if the last trade date is March the 20th, then rollover would happen 7 days prior to that, or March the 13th. It's best to use the current contract month called the front month to display the price action. Unless you're going back in time, I mean really, really far back in time, the current price action may not, or the current contract may not suit the display of information. Because during rollover, the chart tends to look squirrely. It'll either gap up or gap down, and that gap is readily apparent on the price chart. Let's see, next page. If you would like more additional futures information, you can go to fxstreet.com, or you can visit the cmegroup.com and look at some education courses out there. Futures order types. There are 4 of them. There you got a market order, a limit order, stop market order, and a stop limit order. A market order just means that when you want in, you're in. And normally you pay a tick price, or whatever the bid-ask spread is. You're going to pay that price just to get in when you want to get in. A limit order says, get me in at this price or better. So if you wanted to get in at, let's say, I'm just going to throw out an example of $100. If the price of the asset you're trading is at 101, it's got to come down to 100 before the market goes ahead or before your order is executed by your broker. Stop market order is, as soon as it hits that price, I want out, get me out. And then a stop limit order means get me in at this price, or get me in or out at this price, depending upon where the current price action is. So if the price is at, let's say, $100, and you want to short this thing, this asset, you could put in a stop limit order to say, get me in when the price comes down to 99, and it'll get you in for a sell at $99. If you want to, and you can do the same thing going up. If the current price is at $100 and you want to get it at 101 because you believe the asset's going to go up, then you can put in a stop limit order, and as it goes up, you could get in it, or it could jump you. In either event, the market order will get you in when you need it, and the stop market order will get you out when you need it. So the 3 that you're going to use the most common are the market, the limit, and the stop market. So I have a daily routine that I employ here, where I go out to forexfactory.com for any news events that may impact the market. If there is a news event coming up, typically crude oil and nat gas are on Wednesday and Thursday. You have the Fed meeting every 6 weeks. You have unemployment that comes out the first Friday of every month. The markets typically get volatile during those times, and they can move. They can be quite volatile, and if you're trying to get in, you could get wicked out. So for my trade plan, I try to stay flat when there's a news event coming out that could impact the asset that you're trading. And then what I do is I plot the S&P 500 futures contract just to see where I think it may go today. And I use the Bollinger Bands and the average true range. Wayne taught me this this little daily routine a number of years ago, and I've been using it quite a bit in my daily routine. And it could help you in your deciding which way this market's going to go, how far it could go, either up or down. So the trading fundamentals, and Jose touched on this just the other day when we had a meeting. There are 3 categories that all traders need to be aware of. There's methodology, psychology, and risk management. For methodology, you need to determine what trading methodology suits your needs best. Trend trading, counter trend trading, Fibonacci trading, breakout. You see those there. And there's probably a whole lot more after that. So if you have a specific trading methodology and it works for you, if it doesn't work, don't break it. Probably the hardest part is the psychology, and it is for me. I can tell you that once in a trade, you need to manage your emotions, and it really is very easy to take a profit at X dollars, and then I don't know how many times it's happened to you, but it's happened to me a lot. And then after you get out of that trade, the price goes to your full target. So if you're okay with the profit that you're going to make, that's one thing. But to be a profitable trader, you need to try to get those big wins to your original target. We all will get stopped out. That happens. And that's where the last part of the three categories that all traders need to be aware of comes into play, and that is risk management. Every professional trader knows exactly how much money they will lose before they get in the trade. And that's the secret is that you're okay with that loss. So if you're in the trade and you believe that it's not going your way, but it's still within your zone, why get out? You said at the beginning of the trade, you are already okay with the loss. There are some times that, yeah, you'll get out with a smaller loss than you expected. But there's a lot more times where if you just given your trade time to work out, it'll eventually go to where you want it to go. And the last thing is never move your stops that increase your risk. When you in your trade plan, you should have that in there, because if you do move your stops, and I've known traders that have done this, that trade can be very, very, it can go against you very, very bad in a quick way. So don't ever take them off, and don't ever move your stops. So just take the loss and then move on to the next trade and try to get your psychology working again. Price charts. Your price charts need to reflect the correct time frames depending upon how you answered the question back at the beginning of this presentation. Your daily income, your weekly income, or your monthly income. So these are some guidelines that you can utilize for these types of trading. Drawing zones. Being able to spot support and resistance zones on a price chart is an acquired skill, and it does take a lot of practice. You will need screen time in order to be able to zone properly. So you can either practice in a simulated account, or you can do it live using micro contracts, and those are very, very small. Just manage your risk. However, once it's mastered, the trader can go live with standard mini contracts. They're 10 times more profit ability on a standard mini contract than a micro. So if a standard mini contract on the S&P is $12.50 a tick, on a micro it's $1.25. And then to mitigate any confusion over zoning, there is a UFO, an unfilled orders app, that will automatically determine the ceiling where the price fell, large red candle if you're using candlesticks, to short, or a huge green candle when going long. And would highly encourage you that if you're not good with zoning, that tradewithufos.com/CTA-apps underneath will give you some software that can help you out. Are there other ways to trade? You bet. There's so many ways to skin this cat. There are probably a million ways to make money in this market, and probably twice as many to lose money in this market. But the common ones are trendline breaks, breakout trading, momentum trading, and that's just trading with the, if the market's going up, you're just basically trading with the market. There's point and figure trading using support and resistance, and Johnny's going to talk about that just a little bit later. There's news event trading. Some people love to trade the news, but your risk increases due to slippage because the market's moving so fast. People who trade stocks, there's the earnings reports. There's certain ways that you can play earnings 6 weeks before typically the big boys start their earnings reports. So if IBM is going to report on April the 15th, that stock generally starts moving, the volatility starts increasing about 4 weeks prior to that. Can you make money off of that? Yeah. There's options, Forex, and then there's long-term investments. Zoning, what to look for. Whether you're going long or short, you're basically looking for a huge candle. If you're going long, you want that rising green candle with an upward trend. And what I like to do is look for zones that start off with a huge green candle, and then it kind of goes sideways for a while, and then I get another huge green candle. Typically, price action will return to that sideways action, and then continue to go back up in the direction that it started. And the same thing for shorting. A huge falling red candle with a downward trend followed by a period of sideways action, and then another strong move downward. So when price does return to those particular zones, yeah, they will most of the time go down or go in the direction of the first move. And that's how we can take advantage of this type of price action. So you draw the zone around the sideways action in both instances, and that's your zone for the trade. And then if that sideways action is way too wide, then just modify the width to accommodate your risk. And that's the end of my my PowerPoint. I want to go ahead and stop sharing and then promote John to presenter so that he can kind of go over some of the basics for point and figure trading. Johnny, take it away. It's all yours.
Thank you, Jeff. Okay, let's see if yes, I am sharing. Good deal. Okay, somehow I just lost all of my old chat stuff here. Let me bring that back up. Okay, so, one quick note. Can you guys put a yes in there in chat? If you can see my chat box over here, hopefully you can. One thing you need to do, if you select right here, you can see that you can select who you're sending your chats to, all attendees, all panelists, host, presenter, one of us or any of us. You need to check all participants so that we can see it, everybody else can see it, or just choose whichever participant that you'd like to see it. That way we can keep track. And I need to move this over here. Sorry, we're still getting used to this. And I need to have the Q&A up so I can see it. It pops up right in front of you guys where it shouldn't be, but I'd like to make sure that we can keep track of this stuff. And if you have questions, go ahead and put it in the Q&A. By the way, I'm just now seeing that there are some questions. We got started just a little bit late. Sangam. Yeah, okay, answered about 7:13. There we go. So a little bit. We might go over all this again. That way, well, again, in a future session. So you guys, you're looking at my screens right here. And I wanted to start off by kind of explaining the differences between the screens. This one's a time-based chart. It's a 5-minute chart. It seems to match up with, since we have such high volatility in the market right now, the 5-minute screen is matching up fairly well with a 6,500 share bar screen. This is volume, 6,500 shares traded per bar or candle. The way that at least this platform, TradeStation, considers these, they're not really candles, they're bars. So you can talk about this great big green bar right here. That's a bar. This big red one's a bar. You can call them candles, you can call them bars, you can call them whatever you want. So if we were to make these all a whole lot smaller, you can see that they kind of match up. Let me bring these over so you can see them. need to go back to the big gap that we had last night. There's the big gap. So let me get this one down so you can see it. The gap, and you can see kind of all the same shape, somewhat at least. Let me get this a little bigger here. There. And this one, this is a point and figure chart. I'm going to show you a little bit about it. And it has to get really small. And I'm going to have to take those Bollinger Bands off so you can see Bollinger Band. And get even smaller and smaller. Sorry, folks. See how the sausage is made here. And I'm sorry it's getting darker on your screen, but now on point and figure, a gap looks like a giant bar, a giant red X. But you can kind of see here that the shape of each of these charts is very similar because they all show price action. This one shows price action in relationship to time, in this case 5 minutes. This shows price action in relationship to orders filled or orders traded. This one shows the price action with respect to momentum, which way is it going? And I like to trade the momentum style, which point and figure shows very well. I generally don't trade on the minute chart because the time of day or how much price action happened in 5 minutes. What if there were several million shares traded in 5 minutes? You're not going to see that. You're just going to see that the price either moved a lot or didn't move a lot. Over here you see where the interest is. So we're going to get rid of this one for now. And let's see, I'm going to go here and here. Here's a nice little trick that Jeff taught me. If you click on one screen, you click on the next screen, you go up to window right here, you get arrange all. It equalizes the size of your charts across your screen. And it also, everything that you had minimized down here, it makes room for it. You can have a whole string of these across here. And it makes room for it so you can see them all. And it puts them all orients to the bottom left corner with the start. So let's get back to this real quick. Let me make them big so you can see them again. Okay, and go bigger and my end button there. Okay, same thing with this one. We're gonna make it much bigger so you can see it. It all looks good. You can see X's and O's. And very quickly, the way you find this in TradeStation, if you right click on an open space like this right here, go to Format Symbol, and you can see this pop up. You can see that this is a volume chart, 6,500 share bars. I only went back 1,000 bars. It's up here in the normal trading styles right here. Down here, you have your advanced trading or chart trading systems. Okay. Point and figure is this one right here. And this will just take a minute to load, I believe. But if you click on there, you can see that the interval settings change. Today, we're using a box of 1 point with a 3-box reversal. That's what this shows over here. That means each X and each O is worth $50. And it takes a move in the opposite direction of at least 3 boxes, or 3 points in this case, to print a new bar. And with the way that the market's moving, if you watch this little arrow right here, if it gets down to that red line right there, it'll print a down bar of 3 O's all at the same time. So let's just go ahead and move this back the way it was and leave it alone. And I wanted to show you a little bit about why I like point and figure. And hopefully it will get up here and crop my zone real fast. It makes zoning really, really easy. That great big bar, we call that a BAC right there. And that's the ends of BACs. You can see right here, there's a BAC right there. And this right here was a zone at one point. From about there to there, there was a zone, and you can see that it worked. It turned it around. And truth be known, I'm a scalper. I like to minimize and make my zones smaller. If I see a zone on zone like this right here, I would use this to see it slow down, which you can see that it did. It slowed down right there. Then it hit this lower zone right here, and it turned around. If you notice, there's a BAC right here. I look for the my quantities supplied up here, my UFOs, unfilled orders, right up in this area. So I'm going to say that's probably a zone right there. And I can get this to zone. Okay. And let's see. Let's just use a little bit of what we all learned in our classes. Drop a line, and we're going to go back in time and go upward. Take a look. Let's see here. Okay. Got some nice little zones here, some BACs. There's a nice BAC right there, don't you think? Let's take a look. So we're going to call that a zone right there. I like that one quite a bit. You know, we could actually go up to the top of that one because that's a pretty nice BAC right there too. So let's go ahead and go to right there, that one. Now we got a couple of zones up. They're pretty big. You know, there's quite a bit of risk in there. So we might use this one first. We'll see if it's going to go upward. We're going to drop our line down below the price action. Take a look back in time. I like that one quite a bit. Let's see. Not really. I don't like the structure of it so much. It'd be good for a short-term zone. Now, if you're a scalper like me, that'd be a good zone to take 4 points off of. And 4 points would be $200. So, you know, you can make a little money that way. Oh, look at that one. I kind of like that one. So if I was a scalper, I'd be taking that one right there. And let's go. I'm not quite sure. That might have reacted off of something bigger. So let's take a look back in time just a little bit farther. And oh yeah, somebody BAC, yeah, it's a big ass candle. All right, so let's see what that reacted off. Oh, there's the zone right at the bottom of that that gap. Here's the gap I was talking about. In point and figure, you never have a closed candle. There's always one open. So even though price gapped, it didn't actually show it. You won't see it on a candlestick chart, or I like to call it a swindle stick chart. You'll see a big candle like that right there. That's a false candle. That never actually happened. So let's go back in time just a little farther. Oh my. Now there's a nice zone. Let's see here. I don't know. Looks a little bit flighty. I would take that for a scalp, definitely. Let's go back and find a really good zone. Something. I hope I have enough stuff on here. Oh, there we go. That's the zone right there. Let's see how far it moved down into it. It's already kind of touched a little bit. Yeah. No, I'm not sure about that one right there. Let's move on back just a little bit farther. I think there's a better one back here. There we go. That's the zone. That's it right there. Okay, so let's go ahead and mark this zone. See if it's touched it with the Fibonacci's right there. No, it kind of touched the top of it, so that's good. But I like that big move away right there. That BAC right there is a really nice one. I think we're gonna have a big turn there. Probably will. So if you say, okay, John. Also formerly the E-Pirate. You guys might recognize my voice if you're looking for, who Wayne used to present with. That was Jeff and I. One other thing that I want to do real quick, if you can see my chat right here, if you go to all participants in chat, you can tell everybody what's going on. So if you click over to all participants there, we can all see your chat and not just going to just the attendees or just the presenters, that sort of stuff. We check the questions real quick. No questions. Okay. Now, let's say you're relatively new and you need a little bit of help zoning. You can see over here, let's see, I like that zone. There's a pretty good zone right here. There's some UFOs in there. Let's see if we went from the tip there. Whoops, that tip there, and came down to probably about there or something like that. That would probably be a zone. And that's not so bad right there. I don't know. Probably take that whole thing right there if we were to zone it the way that everybody was taught. Whoops, I dropped my Fibonacci. That's kind of big right there. I don't know. I go from there to there. So you can see that this one kind of matches up with the zone that I have in point and figure. It's a little bit bigger, but there's another way to do it. So if we were to take this chart right here, let's change that over to that 6,500 share bar chart right here. We'll just go to volume real fast. We'll go back 500 bars. That's plenty. Change this to 6,500 because it seems to match the shape. 500, got everything right? Yeah, okay. So we'll change that over and hopefully it'll pop up real quick because I closed down almost everything else in TradeStation. So it's not really, apparently there's a lot of action moving. Okay, so let's say we've got these zones right here. Now, if you're not that great at zoning, there's an app out there. And so you go down to Insert Analysis Technique. Actually, you're going to have to download this one. But you can have 8 days of trading with UFOs. I'll put that website up here so you guys can see it. What happens is it shows you where the zones are. If you notice this one, I got real close on my point and figure. And I already have it loaded over here. So let's just enable. Actually, no, I don't. We'll put it on over here and see how I did on my zoning. Okay, we'll go with the UFOs and hit OK. So they're saying that I missed one right here, a nice little zone that it just made. So it made that zone after I was looking. So these zones kind of match up right here. Yep, I did a pretty good job. And if you notice, right in the middle right there, there's a sweet spot. And you can see that the sweet spot lines up with the smaller candle right here. It's just up the top and the bottom of that candle. Let me maximize that so you can see it. And Jeff, let me know if I'm going too long, okay? So you can see there's the sweet spot, and the UFO shows the sweet spot. And then it'll also show you, if I add a different background, you can read it, 2965 to 2970, 50 right there. That's the sweet spot. So if you want to reduce your risk, you might not take the trade all the way down here at the proximal. You move your proximal down here and your distal right back here. And that would be reducing your risk, and that would be a fairly decent trade right there. If we go down below, okay, we're going to switch over to this chart right here, and I'll maximize it. Hopefully it's loading really fast because former platforms that we used loaded really, really slow. And this one loads about as fast as I can talk, which is nice.
John, they are going very fast.
Great. Okay, so you can see this zone. Now, where I put the zone in, it touched it. Where the UFOs put the zone in right there, it didn't touch it. So I'll move back, and we'll see where the sweet spot is. Right in the center there, you can put a line on top of that, and you can see where your sweet spot is going to be. I'll get out of my snap mode, and I'll move it right down there to the top of that line right there. And we can go back in time, and this is all automatic. It just does it for you. So let's look and see where that line ended up, and see right there. Look at that. Line ends up right at the top of that candle right there. That's a candle at equilibrium right there, right at the bottom of the explosive move away. You're looking for that sort of a zone. So if you're a candlestick trader, that's a fantastic looking zone. If you're a point and figure trader, you would have seen that. And it makes it really, really easy. Let me put the website up here so you guys can see it. So I'm just going to copy it in here. So let me jump over here and move that out of the way. Sorry. Okay, so if we go right there, and I will copy this right here. There. Okay, so it's tradewithufos.com. It's CTA apps. That'll take you to the TradeStation. I'm sorry, it'll take you to the Trade Active website. So you can buy it. Now, wait a minute. It's good. It takes you to TradeStation. And you can get an 8-day free trial, find out how you like it. And that way, all your zoning is just taken care of for you. And let's say you wanted to find out zones in smaller time frames, tick frames, share bar frames, that sort of thing. Let's run this down to 1200 real fast, or 1250. And I think if we went back, 500 bars is plenty. You can see a lot of lower tick frame, lower share bar frame zones. See, there's a whole bunch of zones in there that if you go down to a lower frame, like a lower share bar frame, you can see all these zones, and it just shows them to you. So if you don't even trade with them, if you're just still trying to learn what zones are, this will teach you what to look for. It just points them out. It's like, hey, there's a zone right there. Okay. Let's see, Jeff, do you know of anything else that I should be talking about?
I was just going to thank you for bringing up the UFO app. I think Jose may have some additional information on that.
Oh, okay.
I think it's time for question and answers now. So, folks, if you have any questions, Jose, I don't know if you want us to promote you back to presenter so that you can present some stuff, or if you just want us to take some questions.
Jose?
Hey, do you guys hear me?
Yes. Do you want me to stop sharing? Do you want to share?
Wonderful. No need to change the screen. Actually, I think it's more interesting to still have that chart there in case some questions have to do with the market that we have in front of us. The latest part of this session, it's basically Q&A. So any question you may have, this is the time for you to ask. Obviously, today it's the first session ever that we are running in this new FX Trade education program. And therefore, we're going to be building up a structure as we speak in a way where in the initial sessions, as you have seen today, the format is kind of like we're spending a little bit of time to talk about, let's call it the theory of trading or some concepts or techniques on how to trade. And then we spend a little bit of time on the charts to demonstrate. Expect the trading sessions to be more and more and more trading, and concentrate more of the lecture time and so on in sessions that are specific to lecture time. Okay, so hopefully you guys have all identified on the FX Trade website that there is a section where you have a list, with all the live shows, so you can be aware of the schedule, the specific times and the days, and you can click on it to register. And as you know, for OTA students, it's free during 90 days, during 3 months. So it's pretty cool. So anyway, any question? Today, obviously, is our first session, as I was saying. So we've been quite basic, just to make sure that we all speak the same language. But any question you may have about the content of the session today or the charts themselves, go ahead, and this will be your time for you to type your questions so we can take a look. On another hand, while you guys are typing, I would like to say that just like FX Trade is making a big effort by providing access to OTA students for free to this amazing program, that effort extends as well to the technology you see on the screen right now. So the UFOs that John has been utilizing on his charting and analysis of the S&P, that is a tool where by default on the TradeStation website, you will see there is a trial, which is 8 days. But if later on you go ahead and after you activate the trial for 8 days, you send an email to us So we can go ahead and extend that trial for 90 days. And therefore, during that 3 months period, you can enjoy utilizing the same tools we're going to be utilizing in the teachings. So you can practice with us with the same tools, same concepts, and same everything. Okay. Yeah, so that would be it for me. So thank you so much for that, Sechi, with sharing the calendar. Any questions out there? Okay, and again, today's been quite basic, so I understand if everybody followed everything. That would actually be a good news, because in this first day, we wanted to make sure that we are all in the same page. But at the same time, any question you may have, it's important for you to phrase it now, because each day we're gonna go a bit deeper with the concept, the techniques, and the planning. Today, basically, we talked about trading zones, which is the key, because one zone will be your entry, the other zone, the rival zone, will be your exit. On the other side of the zone, you will have your stops to manage the risk, isn't it? So the zone is basically what makes the life of a trader simple from a planning point of view. But there is more to it, right? So we got market environments, we got all sorts of things that impact the market, and when planning a trade, there is more to discuss. Okay, so today was a foundational day, if you wish. So questions, everybody. So we are looking at the chat box here. As of now, it seems that everybody followed. Okay, so John, if you don't mind, if you don't mind to type my email on your screen, so we don't need to switch screen sharing. It's jose@fxtrade.com. That would be appreciated, because this is so you have John Titsworth at fxtrade.com. You also have Jeff Sonier, which is j.sonier@fxtrade.com, and then John is also typing my email address now, jose@fxtrade.com. So that would be mine, okay? And if you turn on auto UFOs on your computer, you want to send an email to me, to jose@fxtrade.com, so I can discuss this with TradeStation and extend your trial for 90 days, okay? Yes, Julie, I am listening to your question. And when it comes to executing live trades, this is what we cannot wait to do, okay? We are really keen on getting to take full advantage of our 1 hour together here. But of course, we are a collection of different traders coming from different places. We all understand the importance of timing the markets, entering at the right time, exiting at the right time, etc., managing risk, managing emotions and the mindset and everything else. But at the same time, we want to make sure in these initial sessions that we're also laying a little bit of a foundation, just to make sure that when we start putting money in the market, you guys can follow in a way that is safe for you. So we're going to be combining a little bit of teaching first and trading after in those initial weeks. And then it will be intense, Julie, in the sense that, we're going to take full advantage of those 1 hour sessions. Okay, so I would like to encourage you to keep joining us. If you can, live is perfect. If not, this will be recorded. But keep joining us, because that way, as we build that foundation and we go to the next level with more and more of those introductory pieces at the beginning of the session. So after a few sessions from now, we'll be in the very same page to be able to plan trades quite quickly and put some execution in place, apart from only a discussion, which has been what we did today, given the fact that it's session number 1. Okay. Okay, thank you. Also, just to know, the chat is disabled. Yes, Julie, you are absolutely right. And we are so sorry about that. I'm not really sure what happened at this moment in time. I guess it's a minor, I would even say silly logistic problem, but somewhere, we probably forgot some switch on, and we had a little issue starting the session, as you know, Julie. And also we had a little issue with the chat as well during the session. So we'll get much better. And a few hours from now, actually, I will be myself presenting a session on stock trading. So if you want to join me then, Julie, or anyone else watching this recorded afterwards, hopefully we have everything now in a better position, and everything's going to be smooth. That should be the case. I mean, we are running here millions of sessions on FX Street for years and years. So not sure what happened today. I guess we just forgot one switch. Anyway, Jeff and John, anything you guys would like to add?
No, I think I'm good. How about you, Jeff?
I think I'm good. Thank you so much, Jose, for giving me this opportunity to present this information.
Yeah, I had a good time. Thank you, Jose.
Thank you, my friends. It's really a pleasure for me to be sharing this time with you and with all the attendees. We'll share a same passion together, isn't it? We all love trading, and And this is fun and this is powerful stuff. So we'll see you next time, everybody. Thank you so much for attending today, and see you soon in a few hours or tomorrow. Bye bye. Take care.